Yeah, I just couldn't say no. Hey guys, Matt here. On this channel, we talk about stocks, investing, and personal finance from the point of view of my own financial journey. So this week's portfolio update was supposed to be a different kind of video. However, I found a stock that I just couldn't pass up. And that stock is FedEx. Over the course of this week, I was looking for, more stock, more companies to invest in and stuff because I haven't found anything for a while. I mean, I said this in my last couple of videos and posts on Instagram. I just couldn't find any good positions. And I was content, once again, to hoard cash until I found something. But, I mean, then I came across this guy here. Now, FedEx, you probably know what it does. You live on planet Earth, so you know what FedEx does. And I read their 10K. Their business model is exactly what you think it is. They transport and deliver shit. They just do it on a worldwide scale, and they're very good at it. Now, the stock pays a dividend, but we're not going to talk about that too much since it's only 1.04%, and it's not the reason I bought the stock. Right now, they're trading at roughly $252. This is the first thing that caught my eye when looking at the stock. Their current forward PE of 15.13. That is really good. And to go from a past PE of 26.69 to a 4 PE of 15.13. Let me make that a little bigger, ladies. That is really good. Like, that is really attractive. That means their earnings is more than matching their stock price. And that's pretty good given that the average forward PE for the industry that FedEx is a part of is 33.29. That's the forward PE. So, and I mean, Fidelity has it at 14.25. So whether it's 14.25 or 15.13, like, that's really good. And then the thing that really caught my eye is the PEG ratio. Now, the PEG is where you take the PE and factor in the growth potential. Now, the idea is to get it as low as possible, and you want it ideally lower than 1. However, most stocks don't quite go below 1. So the consensus is that to have it go as low as it can go, comparison with its peers. To have a PEG of below 1, that's really good, and that caught my eye. That's the current right there. And even as of the last earnings, 1.16, that's really good. The price to sales is looking better and better. Now, if you want to look at their payout ratio, now again, we're not talking about dividends too much here, but their payout ratio is only 21.22%. That is really comfortable. That means they could raise their dividends if they wanted to. Now, they haven't raised their dividends in the past. They haven't raised their dividends since 2018, but I don't care about that. So if we take a look at their latest quarterly report from their 10Q, they jumped from, on a 3-month period, they jumped from 17.3, this is in millions, so they jumped from 17.3 billion to 20.5 billion bottom line, and on a 3-month basis. And on a 6-month basis, they jumped from 34.3 billion to 39.8 billion. That's looking pretty good. Their earnings per share, they jumped from 2.15 to 4.64. And then on a 6-month basis, they jumped from 5 to 9.4. Looking at their balance sheet on a quarterly basis from the end of November versus the end of May, they jumped from 4.8 billion in cash to 8.3 billion in cash. Their assets jumped from 73.5 billion to 81.1 billion. Their liabilities did go up, but let's see, if we add this and this, so we're talking about 36. They're looking really good as far as their assets versus liabilities, at least according to this 10Q. Now, their debt did go up a little bit, and their debt is considerably higher than their cash equivalents, which is a little bit, which does worry me a little bit, but not enough to deter me from the stock, at least not right away. They seem to be handling things quite well. Now, look at this cash flow right here, their operating activities. This is from their 6 months, 2020 to 2019, year over year. They went from operating cash flow of 2 billion to 5.2 billion. They more than doubled it in a year. The free cash flow, well, not the free cash flow, but that's looking really good. And even if you subtract their capex, they're looking amazing versus last year. So, I mean, their cash flow is looking really good. So, I mean, their financials are really improving. Thanks to obviously thanks to the pandemic, but I mean, you can't blame it solely on that. They're just really kicking ass over the course of the year. They have a very simple business model, but they seem to be doing really, really well at it. Now, I had the opportunity to listen to their latest earnings call, and they were very confident. Now, I know all earnings call. I mean, I know they sound confident in all earnings calls, but I mean, this company has some ass to back it up. I mean, I just showed you their numbers. Like they were doing very well. Now, they did not provide an earnings forecast for 2021, which probably attributed to the stock price, even though they performed fantastically. I mean, but I'm not looking at that as a loss. I mean, the COVID situation makes everything uncertain, and they've been kicking ass so far despite it. So I'm pretty good. They did mention on the earnings call that they are focusing a lot of their capex towards expanding their FedEx ground business, and they are also spending some money in order to grow in the European theater. So this is a company that is still trying to grow despite everything, and with the additional cash flow, I can't blame them. So I think even when this pandemic subsides, that the cash flow that they gain because of it is going to propel them substantially. They've been selected last month to transport the first shipments of the COVID-19 vaccines, this is the Pfizer BioNTech vaccine, but they've been selected as the company to ship it across the United States. So that's going to make them some even more money over the next couple of quarters. They've also recently completed their acquisition of ShopRunner. Now, my understanding is that this is going to help bolster their e-commerce business and allow them to expand those capabilities. So, as I mentioned, the stock price is trading at $252, which has a very low PE when compared with its most of its competitors, well, all of its competitors. So that's looking really good. Take a look at their analysis. Now, I know this is, again, an analyst is not something that, you should trust as gospel, because earnings have repeatedly, go above or below their estimates. But right now they are estimated to go from a year ago 9.5 EPS to 17.48 this year. So that is some massive growth. And then from there, assuming they don't fall off, to 18.77. So from 9.5 to 18.77, we're looking pretty good. Now, although they didn't provide an earnings forecast, the business itself, the analysts are predicting that they're going to go from 69.2 billion a year ago to 79 billion. And then up to 83 billion at the end of 2022. But we'll see how that ends up. Now, one thing I do like to look at is the ESP trend. Now, this is something that, again, is not gospel, but I like to look at it. Basically, it's how analysts revise their estimates as time passes, and you want to see these numbers go up as it gets current, right? You don't want to see them go down. And the fact they're going up, it's generally a good sign for me. It means that investors, or at least analysts, are having more faith in the company over the long term, at least until 2022. So the stock clearly has some growth potential, at least in my opinion. Now, is it going to 10x or 20x over the next 3 to 5 years? I don't know, but I'm kind of out of the business of all these hot 10x stocks. I kind of don't want to do that anymore. I'm kind of boring now, so I look for companies that have growth potential and are undervalued, which should grow comfortably over the next 3 to 5 years. And I think FedEx is it. So I'm gonna use a really quick PE tool to sort of gauge, guesstimate a ballpark fair value. So let's take their analyst estimate for their EPS for the end of 2022, 18.77, and now, I know that the PE ratio, for PE of the industry is 33.29, but let's be a little more conservative. Actually, let's be a lot more conservative. Let's just take a PE of 20, which is what I did, and multiply it by 18.77. So at the end of fiscal year 2022, I got $375.04. Now, assuming I expect an 8% return, we can divide by 1.08, and we're looking at $347.59 at the end of fiscal year 2021, which is the year that FedEx is in right now. So, just to be a little more conservative, let's take that amount, 347. We take 90% of it, and we got 312. Sorry, I kind of fucked up a little bit with the keying, but yeah. So 90% of that, even if we're conservative, we got a fair value of $312 at the end of fiscal year 2021. If we want to be a little more conservative, even more, we can take, because we're still in the middle of 2021. Let's take 347.59, and let's take 80% of that. We're still at $278. So even if we want to be really conservative, I think this is a pretty good price. So I think the price that it's trading at right now, even though it's going up over the past 6 months, I still think this is a really good price. So let's finally go to my portfolio and see where I am with FedEx and my plans with it, as well as my other positions. And now I have enough positions that I have to scroll down for you to see the final results. I did want to make this portfolio tall and not wide, but I guess we're not going to do that anymore. I guess we're just going to sit here with 15 plus positions, and that's our life now. But as you can see, I started out by buying 5 shares. Now, this is not the entire position that I want to make in the stock. I eventually want to, put about $3,000 or $4,000 in over the course of a couple months. However, the way I treat stocks is I don't put all my money in that I want to do at once. So I feel 252 is a nice place to start. However, there's a possibility that it could go down, and that's what I want. If this thing goes to 240, 230 over the next couple months, I'm definitely going to increase my position to what I want. However, I just wanted to get a position started in case it just started shooting up. Kind of like I did with Johnson & Johnson. Taking a look at my portfolio at large, I did put $800 into this portfolio in addition to my normal $1,200, because I got a promotion and I got extra money to put in, and which means that more money is going to go in this portfolio. We are looking pretty right now. Most of our positions are up. The only down position is AT&T. I don't think I want to add any more to AT&T, even though it's a pretty good dividend stock right now. I just don't want to, overcommit to this role just in case it does cut dividends down the line, because there's always that possibility. Tesla, we are up 110%. We're looking pretty good. My current value right now is $37,708.82. We are up. Now, this isn't year to date. This is overall time. We are up 38.49 cents. And we are almost up to 5 figures. We are almost to a 5-figure gain, and I'm waiting for the day that's going to happen. But anyways, what do you guys think about FedEx right now? Is this a stock you're interested in putting money into? Or are you going to wait a while? Let me know down in the comments. But anyways, take care, have a great day, and eat your vegetables.